Today, our analysis focuses on the profound structural shifts happening within China's Baijiu industry. We're drawing from a comprehensive research report to break down what's happening. And what the data reveals is a market at a really critical inflection point, one that's full of both challenge and, perhaps surprisingly, opportunity.
So, let's get right to the core thesis. The industry is currently facing a structural crisis that is, in many ways, more severe than the last major downturn we saw. Now, paradoxically, this very crisis, which has pushed valuations down to 5-year lows, is also creating a historic strategic opening for the market leaders as the industry consolidates at a pace we've just never seen before. To really wrap our heads around this paradox, we first have to dissect the anatomy of this current adjustment. It's fundamentally different, and you'll see it's far more complex than the challenges the industry was up against about a decade ago.
Now, this comparison of the two adjustment periods really highlights some critical differences. The 2012 downturn, you'll remember, was mostly policy-driven, and it happened against a backdrop of over 7% GDP growth. The environment today? Well, it's compounded by slower economic growth and, critically, a deep downturn in the real estate sector. And that's so important because real estate was a massive engine for that high-end business consumption that drives Baijiu sales.
But beyond these macroeconomic pressures, the most acute and immediate problem is actually a crisis that's brewing within the industry's distribution channels. This is really where the pressure is at its most intense right now. The scale of this channel problem can pretty much be summed up by this one number: 900 days. Now, what does that mean? It represents the average time it would take a distributor to clear their current inventory if they didn't make a single new purchase. We're talking about a massive inventory glut that has created a logjam through the entire supply chain. This inventory pressure has led to a really widespread and destructive phenomenon called price inversion. This is a critical market signal. It means distributors are being forced to sell products for less than what they paid the factory for them. They're literally losing money on every single transaction, and that is just completely eroding the profitability of the entire channel. So all this pressure in the channel, it's the catalyst for a major industry reshuffle. The impact isn't uniform at all. Instead, it's accelerating a dynamic where the market structure is being fundamentally redrawn right before our eyes.
The environment right now can really be described as a Darwinian-style elimination. You see, this is not a downturn that lowers all boats equally. Instead, it's speeding up the industry's Matthew effect, that dynamic where the strong get stronger and the rich get richer. The dominant companies aren't just surviving this, they are actively capturing market share from their weaker competitors.
And the data really quantifies this trend perfectly. The market share of the top 5 companies, what we call the CR5, has tripled, going from just 15% back in 2015 to 45% today. I mean, that is a dramatic and incredibly rapid consolidation that is permanently changing the competitive landscape.
Let's look at Kuisha Motai. It really serves as the industry's anchor. Its brand is so powerful that even with wholesale prices coming down, its distribution channel is still profitable. And that's a pretty unique position to be in right now. Critically, the investment logic around it is evolving. In such an uncertain economy, its high, stable returns and dividends mean it's being seen less as a growth stock and more like a bond-like asset, and that provides a defensive floor for the entire sector.
Now, in stark contrast, you have Shanxi Finjiu, which is just a fascinating case study in aggressive share acquisition. Its success is really rooted in what you could call a dual-engine product portfolio. Its premium Quinha series is there to capture high-end demand, while its mass-market Bufen product actually thrives when consumers tighten their belts. This structure allows it to perform well in almost any economic condition.
Okay, so with these dynamics of crisis and consolidation in play, the key question for any analyst becomes, how close is the industry to finding a cyclical bottom? The valuation data actually offers a pretty compelling perspective on this. From a valuation standpoint, the market is pricing in some extreme pessimism. The sector's trailing price-to-earnings ratio is currently in the bottom second percentile of its 5-year range. So to put that another way, in 98% of the trading days over the last 5 years, the sector was valued more highly than it is today. That tells you a significant amount of negative news is very likely already priced in.
So to understand the timing of a recovery, the report outlines a 3-stage cycle. First, the channel bottom, where distributors start losing money, has already been reached. We're now approaching the performance bottom, which is when companies will report their weakest earnings. Now, because financial markets are always forward-looking, share prices are expected to find a floor before the worst of those financial results are officially confirmed and hit the headlines.
So, given that the market is always anticipating the future, this analysis concludes by identifying the single most important forward-looking indicator,
the one signal that could point to a recovery in market sentiment.
Amid all the noise of financial reporting and economic data, what's the core bellwether? What is the one metric that truly reflects the health and, maybe more importantly, the sentiment of the entire Baiju ecosystem?
It is this, the wholesale or batch price of Mutai's flagship product, the 53-degree Feitan. This price is the industry's ultimate barometer. Its ability to stabilize, particularly after the key mid-autumn festival sales season, which is going to act as a major stress test, is seen as the most powerful potential catalyst for restoring confidence across the entire sector. It is the single most important signal to watch.